This conference will now be recorded.
All right, good morning, everybody. This is Greg Morton. It is Sunday, September 26, 2021. And then this is the weekend update for growth stock investors by the Greenville Eastside IBD meetup group, as well as the Stockyard meetup group. So here's our standard disclaimer, sorta. You are driving your own portfolio. You and you alone are responsible for your mistakes. So you need to have your written sell rules, you need to have your written buy rules, and you need to be following them. And don't come whining to me when you don't do that. So here's a couple thoughts on mistakes just to get us off on the right foot. I never make the same mistake twice. I make it like 5 or 6 times, just to be sure. Um, been there, done that. And then sometimes I just want to go back in time and punch myself in the face. So that's a failure to follow the rules. So what are we going to cover this weekend? We're going to look at the M factor like we always do, market review and market direction. 2 weeks ago, I had put in there market showing some cracks. Of course, I did not do a video update last weekend because I was speaking at the San Francisco joint meetup and was tied up with getting that presentation ready for Sunday afternoon. So I changed it this weekend to is market healing the wounds that we've seen. We're going to do some chart review. We'll look at the GTP and 6 to study, maybe for your watch list, and then details on our prior meetings and what we'll be doing in October at our big monthly meeting. So as always, the M is the most important letter in Canslim. O'Neill and IBD teach us to interpret. We don't want to predict, and we want to look at 3 things: actions of leading stocks, actions of stocks we own, which hopefully overlaps with number 1 a whole bunch, and number 3, market pulse, distribution day count, price and volume on the indexes. So I look at that at Marcus Smith as well as the group teaching portfolio. So let's exit out of here and go over there. Let's go to the indexes first, looking at the NASDAQ. So here's the daily chart. So we started this week off really ugly, big gap down, ugly close on Monday, lost the 50-day below all 3 of the key moving average lines there. Almost looked like a vertical violation was in play. Wasn't quite per their rules, but it was getting close. And this was just bad. And then the indexes, as they've done lately, have shown resiliency. We just can't even get a real correction, can't even go down 10%. So still showing some strength in there. So we'll watch to see what happens with regard to that. Let's go to the S&P 500. Same thing on Monday, ugly crash of the 50-day, gap down, and then just kind of grinded back up. The volume's declining. That's not constructive. It's sort of wedging, but back above the 50-day and fighting there at the moving average lines. NYSE, was already under the 50-day, had an ugly Monday. RS line trending down. The Dow, they followed suit. When we have a really bad day, everything normally gets hit. So that's why we have our selling plan and our sell rules and our stops in place, so we don't get caught up in the emotions of those really ugly days. And if you're Charles Harris, you're buying on those really ugly days, but I can't do that. Here is the Russell. This is even worse. Came down under the 200-day, but then just, grinded higher. Same thing on the S&P 600, came down to the 200-day, found support, now back above all 3 moving average lines, need to get those headed back up. If we switch over to the coloring book, we can see that damage that came in this week at one point by, I guess that was 1, 2, 3, 4, 5. Yeah, Monday. So Monday actually flipped all the MMTS to red. The NASDAQ and the S&P 5 were still yellow. So those flipped to red. Steve Sweat's window of opportunity closed. The market school exposure model went to 0 exposure. Power trend still under pressure. And as of Monday, we only had 10 buying days and 12 selling days. So the sellers were winning. And, then by the end of the week, we have IBDs going back to green on Thursday. The window of opportunity opened up back up very quickly. The small cap indexes went back to green and yellow. On Friday, the Dow moved back up to yellow. And all of a sudden we have 12 buying days and only 8 selling days in our 25-day window that goes back to the orange dot. So we had some breakouts this week. They're marked in bold, so it'd be important to watch those and see how they work. There's some growth stock names in there: Snap, Semtech. Um, Devon Energy is not a typical growth stock. It's an energy stock, cyclical commodity, but it's acting like a growth stock. Progress, PRGS. So you can study those and see what they do. Let's go back to our presentation. So overall, oops. So there's a lot of stocks extended right now. This is good and bad. The good is that the leaders are mostly still working. There's not a lot of broken growth stock charts out there. So the fact that a lot are extended is a sign of strength, as long as those charts do not suddenly start breaking down. The bad side of that, it is definitely a stock picker's market. Must be very disciplined with any buys, including whether you're initiating a new position or whether you're following your add-on buy rules for positions that you have. And of course, the add-on buy rules are important because sometimes the best stock out there may be the one that we already own. We need to be force feeding our winners, as O'Neill teaches. We don't want to chase. We don't want to buy extended. Still been a tough market this year for growth stock investors. Mark Minervini said that, Stan Weinstein, Kevin Martyr, IBD Live, the IBD podcast teams, the guest. This has been pretty well acknowledged by a lot of very knowledgeable people. So it's, while the indexes have held up, we've just had all this rotation. You had a riptide under the surface for growth stock investors. So it's been kind of tough. So my current interpretation, by the end of the week, sort of cautious optimism, I would say. So overall, I'm thinking it's okay to wade in slowly, and as things work, can wade in a little bit more. As I said, want to be super disciplined with any offensive moves. Make sure the fundamental and technical setups are there and the entry is correct. Want to stay very tuned into the M factor. It could still be some little bears hiding in the woods, even though we don't get bear markets lately, it seems. And then we have EPS season coming, along with somewhat of what can be a seasonally strong time. No need to, can't predict that that's going to happen, but sometimes starting in mid-October to late October, running through the end of the year and up to the Santa Claus rally, so to speak, can be a good time for growth stock investors. So we're just watching carefully to see if we see that strength coming in. Now, on the sort of the negative as well as positive side, some market moving events. So earnings season ramps now in 2 weeks. That's pretty soon. That'll start cranking up in strongly, and will run through mid-November. Delta COVID goes back to school. In our area, it seems to still be ramping up with hospitalizations and everything, and hitting a lot younger people, but the national news indicates all that's declining. So I'm just not sure. The China government continues its destruction of businesses. Cryptocurrencies are fraud, video games, and kids spending time on those is attacked. I mean, this all goes back to a couple months ago when they went after Jack Ma and canceled that really, that was going to be the largest IPO ever, Ant Financial, if I remember correctly, that Mao was heading up. And it's kind of been downhill in China since all that started. You got Evergrande, or we may start calling it Nevergrande, default collapse. And then on the US side, what's going to happen with this infrastructure bill, government shutdown, the debt ceiling issues are rearing their ugly head again, and then what's going to happen with tapering. Powell did a good job this week with the Fed meeting, I think, calming everybody's nerves. I think he's done a good job overall on being clear where things are headed. So the markets actually reacted favorably after the Fed meeting this week or the results of the Fed meeting when they came out Wednesday afternoon. So let's look at some charts. We'll get back out of this and go over back to MarketSmith. So let's look at the group teaching portfolio first. Oh, I didn't pull up the spreadsheet. sorry, when we're doing market review, let's look at it quickly. So that bad Monday, my rules triggered us out of any weak positions because the window of opportunity closed. So I do follow Steve Sweat's rule that I'm going to sell any losing positions when that happens. Looked like the market was going to continue to go down, but no way to predict. Did not continue to go down, but did close those out. So we really only have currently 5 full positions and 1 partial position. Some of these are oversized because I've been adding per the rules on the ones that are strong and trigger add-on buy points. So currently 75% invested on a cash basis. See that in the middle of the page at the bottom, and up 23.68% year to date. So outperforming the indexes at least, but not outperforming them to the degree that we like to. There's that ugly Monday that really took a chunk out. But then we did recover at least half of that within 3 days. If you add those 3 together, Tuesday, Wednesday, and Thursday gains. So that's nice to see. It's a little better when it recovers half of it within 2 days, but Scott O'Neill's general rule of thumb is if you get half of it back within 2 days, then the rally may have a chance of resuming and surviving. It doesn't mean it will, but just a nice little rule of thumb. So that's where we are on that. I'll go back to Market Smith. So let's just look at the charts on the stocks that are in there. Look at weekly, because that's what we do first. So Tech, ticker TECH, which is Biotechne, I think. I don't know how to pronounce it. It's okay. It's performing well. You know, it's up at the 20 to 25% profit goal. It is, if we look at the daily, stock is just beautifully obeying the 10-day. You know, it closed below it one day there. It didn't undercut that. So may ride that one a little bit longer, try to get an additional gain out of that because it's just obeying the moving average line so nicely on that one. Same thing on this one, AVTR. You know, it's just right in that's the 21-day. Well, that's the weekly chart. So here again, another one just beautifully obeying the 10-day moving average line on weekly chart. Just up week after week after week, just creeping higher. The RS line looks good. It was in the New America article back here. Dexcom continues to slowly make progress above the 20-25% profit goal. Doximity sold some of this one off into strength and watching to see if it forms a new base here. Palantir trying to get going. We'll see what it does. Charles Harris had really good comments on this one on IBD Live on Friday. He had high conviction in it, and then just have a partial position in one of these recent IPOs. Very early aggressive entry on that one. So that's where we are on those. 06 to study. Let's see, let's look at the weekend update. So these were just some that are worth looking at to see if they qualify for criteria and should be on the watch list. So this is IQV, you know, is currently within the buy zone, has Canslim earnings and sales, Fidelity Contra funds in there, liquid 178 million. Whole Logic, this is one that we had to come out of on Monday under the window of opportunity closing rule, but it's still setting up. So, you know, Canslim numbers, again, Fidelity Contra funds in there, has an all-time high up in here. So that may be one to study and see if it's watch list worthy. Sorry about that. Semtech Corporation, it's just broken out. It's in the blue zone. RS line needs to catch up. Might want to study that one. It's a little bit thinner. That one's down around 32 million a day, where 4 of these are over 100 million per day. Apps, maybe setting up an early entry in here somewhere. So maybe want to study 4 green dots. So this one has triple-digit earnings and sales. Wow, at least for 4 quarters. So definitely Canslim earnings and sales and good annual growth ahead. So could be one to study. It'd be nice to see the RS line go up to new highs if the price can get up to new highs. Denbury, I don't do well with commodity stocks, but still have to look at this one. It's got triple-digit earnings and sales and decide if it if it makes top tier watch list or not, setting up 26% deep consolidation. And then finally Square, I can't remember if I mentioned this one in a prior weekend. I thought it was setting up a double bottom in here, and finally it's long enough that actually pattern rec picks it up. So it wasn't quite long enough when I was looking at it. Now it is. You got an 18% deep double bottom in there. Well-known name, very liquid, $2 billion per day. Got some top rated funds in it, of course, and again, triple digit earnings and sales for 2 quarters on that one. So that's pretty strong. So that's some that, you know, again, we're studying, see if any of those meet your criteria to go on your top tier watch list this week. So in our monthly meetings, September, I actually spent the entire meeting and the Q&A time just teaching on a complete weekend review. So that was a 2-hour plus meeting. Here were sort of the subtopics that we covered in there, and it just took that long to cover it. Had to get it all in. I would have messed y'all up if I just gave you like 1/2 of the complete routine for the Canslim investor. So some of that was a 30,000 foot perspective. So in October, we will go back and I'll present additional details on some of those key steps. We'll do a deeper dive. We'll look at my watch list from the weekend right before the meeting, what that process looked like, what was on the first pass watch list, and then what ended up on each tier, tier 1, tier 2, the ad tier, the IPO tier, and then the Wild Wild West that we talked about at the September meeting. So here's a nice little note that somebody was kind enough to send me on the weekend review webinar. They'd watched it. They'd not watched any of our meetings before. So it was nice. I appreciate the note, and it helped. And I try to be very practical when we do the meetings and teach it like Canslim Investing for Dummies on how to actually do it. So I try to delve into it a little bit more than maybe they do in the Market Smith webinars or the IBD webinars, and at least it was successful for one person. So that's good. There's a list in here of our prior meetings, so you can look at those, you can order those. I know I say this all the time, but really if you don't have a set of written sell rules, that's really important. I spent 3 very detailed meetings going over that, how to write a set of sell rules, what are the different trading zones on the Market Smith chart. And then the third one, I even shared my current written sell rules, or the current ones at that time, because they continually evolve as we go through and do our post analysis, but still pretty close to the same. So you can order the 3 of those. Then in September, of course, we covered the complete weekend review, August. So the prior ones can be recorded. If you've never gone to a meeting, if you just signed up, if you sign up for the October meeting, I send a courtesy copy of the prior month's meeting, so you actually can get that one for free if you're a first timer. Here's the contact info. 2 meetup sites, Greenville East Side IBD meetup and the Stockyard meetup site. So the Greenville East Side one is the one I run with IBD. You just go to meetup.com and search for it. And then the Stockyard's the one I use to coordinate the online meetings. There's email, my Twitter handle, and then the YouTube page, which you're on now. It's the Stockyard by Greg Morton. So if you'd like and subscribe to that, if you do like it, that has these weekend videos on it. It has the instructional video on how to use the group teaching portfolio that we looked at earlier. Our May meeting, which was the IN Canslim, the full meeting's on there if people want to see what we covered at our meeting. There's a 30-minute video I did on the 8-week hold rule, because I think that's the most misunderstood rule in Canslim investing. So that's on there too. So that's it. Hope you guys have a great weekend routine, and look forward to being back next weekend.